Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Akums Drugs and Pharmaceuticals. It's an IPO which is coming on July 30th, closes on August 1st. Price between 646 to 679 rupees per share. It's a fresh and OFS which has a total size of 1856.7 crores with a fresh equity of 680 crores coming in there. The company is valued at little over 10,685 crores at the upper end of the price band. And joining me today is Sandeep Jain, who is the managing director of the company, and Sumit Sood, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. My first question to you is, Mr. Jain, give us a sense of what your business profile is, what are the big business segments that you work on, and how are you going to use this money which you're raising in primary issue?
First of all, thank you for calling us in the interview, and we are very much happy and delighted. We are the largest CDMO player of the country. We are the largest pharmaceutical manufacturer of the country, with more than 9% of the total domestic products are being manufactured in the country by Akums. We are having multiple number of units, formulation manufacturing units. Then we do have a small vertical of API as well. Then we do have a small marketing division as well. And we are into exports. We are into trade generics. We are into almost all verticals of pharmaceutical formulations. And you're talking about the money. I think that Mr. Sood will be better to answer this question.
So the primary raise of 680 crores would be used for repaying the loans that the company has, and some would be for the future development of the company.
Can you give us an idea of what is the kind of borrowings or debt which is there on the company, and how much will it be repaid after the IPO is completed?
So you know, the company is not leveraged at all as far as debt is concerned. After our cash and cash equivalent, our net debt is 220 crores. So likely we'll pay around 360 crores of debt. Remaining would be for general corporate purposes and working capital.
Give me a sense of your financials, Mr. Sood. You had a revenue base of 4,178 crores. That's over 3,650 crores in the previous year in FY23. But there was an EBITDA, which was impacted by one-offs actually. Can you explain that one-off? What is it, and how is it going to go forward from here on?
Right. So 78% of our revenue comes from our CDMO business, and 94% EBITDA also comes from that business. We have historically grown at 15%. We, as you rightly said, we have a revenue of 4,178. If we were to remove the put liability, our EBITDA is 515 crores. The one-time hit on the previous financial that you were talking about was the acquisition of API business where we were investing. So that, for that period, had temporarily dragged our EBITDA. That business post-acquisition from NCLT has been turned around, and we think that in this year, we should probably be breaking even and see that business growing henceforward.
Mr. Jain, can you explain that put thing a bit in a little bit elaborately, because it seems it was a buyback that you had done from one of your investors?
Yeah, that's right.
So let me help you understand this better, right? So when we had an investment agreement with Quadria, one of the terms was, and these are standard terms, was buyback. Now, when the buyback happens, there is a particular accounting entry that is done, which is based on a DCF. A valuation is arrived at for the shares held by the investor. So that shares, in case were to be repaid under buyback at the date of the financial statements, it gives you that put liability over there. This liability is a notional entry. We do not have an expense of this or a tax benefit. And this, in the current year, was around 1,365 crores on a total 15% stake of Quadria Capital.
Okay, so actually you haven't bought back any equity, it's just a liability which is coming in and you are marking it on your books, is it?
Yes, this is how it is, but just that you should know that on 29th of May, what we have done is that this put liability has been removed completely. So what will happen in the June financials, you'll probably not see the put liability. The net worth of the company, as I told you a number, would get reinstated by that much amount. So the net worth of the company would be upward of 2,000 crores. So that put liability was impacting the P&L and our balance sheet. So all the financials post this removal would look very healthy when we show it to you. So if we were to look at our DRHP, the adjusted numbers would give you the true position of the financials of the company.
Mm-hmm. Give me an understanding here, because it's a little complex, so investors also want to understand this. You had taken this liability in FY24. Now, in May, you have reached an agreement where you removed this put liability from your entire agreement or shareholder agreement, which basically means that you may be able to write back that
Yes.
provision that you already did in FY24. Is that it means?
Yes, you're right. So the way it will work is that in the March numbers that we have shown, there is a P&L impact of 357 crores, which reduces our EBITDA and profitability, right?
Yes.
But on an accumulated basis, based on the fair market value, our net worth gets reduced by 1,357 crores. So what will happen is that because we are not buying back and the exit is happening through an IPO, this liability that is appearing will get reversed in the balance sheet, and we will have no impact of this from 29th May onwards, because that's the date when the put liability ceased forever.
So, so does it mean that there would be some liability up to between April 1 and May 29th coming in the first quarter of your numbers, but thereafter it may not be there? That's what it means?
No.
Or is it mean
Yes.
that you will...
Yes, you're right.
Okay, and then there will be a write back as well, which will be there.
But it will be a notional entry only.
Yeah, I mean, I'm
There'll be a
talking
write
from...
back. So what will happen is that...
Please go on.
Yeah, so what will happen, let me explain. What will happen is that the fair market valuation, which would be arrived for the company on the 29th of May, for that almost 1 month and 29 days will hit the P&L, and after that it goes away. And then, as I explained, that when the net worth is reinstated in the financials, it would have probably ceased.
Mm-hmm. Can you give us an idea of when you did the DCF valuation to arrive at a fair market value? What was the share per price? Price per share, basically?
So, no. So what we did was the DCF value was done for accounting purposes. Based on that, the share price would be 613 rupees. If that is the discounted cash flow value, which is a notional value.
Okay. Okay, so in Q1 and Q2 and remaining 9 months, you won't have that, and your margins will go back to 12% odd, which was the kind of margins that you showed at the end of FY24 based on adjusted EBITDA.
Yes.
Right.
Yes, you're right.
Okay. How Mr. Jain, can you give us a sense of the business in that sense, that you are sitting on a margin of 12%, you are one of the largest CDMO players. Is there enough room for you to increase those margins going forward?
Yes, there is enough room to increase our margins, of course, no doubt about that. We are the largest CDMO player. We do have so many R&D facilities with us, with more than 900 DCGI approval and more than 600, say, export dossier approved are there. Then we do have 3 R&D setups. One R&D setup is there for API manufacturing as well. Now we have come up with the API facilities, which are now increasing their margins. Then as far as CDMO player, we have filed so many patents last year. Then few of the patents have already been granted. Now we are into some innovative formulations as well, which are going to give us good margins in future.
What is the kind of product roadmap
in all
that you have?
verticals, we are going to increase our margins.
So, what is the kind of product roadmap that you have?
Yes, all the products which are going to be off-patented in the world, we always keep track on that, and including their, say, financials, their revenues, potential revenues in the country, potential quantum which is to be marketed or consumed in the country, that kind of things, we always keep track on that.
Mm-hmm. Can you give us a sense of...
those are giving us, those are going to give us... Yeah.
Can you give us also a sense of how many of those products are under clinical trials? Because you send your products for clinical trials, thereafter it goes. So how many of the products are in clinical trials, and how many of them will go commercial, and what is the timeline for that?
We can't give you so many futuristic things, but so many products are there which are under pipeline, including the clinical trials, including the say development stage. For so many products are there in the stability lab, which has already been developed, but are there in the stability studies.
Mm-hmm.
And it's an ongoing process.
Give me a sense of your branded generics business, because that's also one emerging which has nearly 17% of your revenues coming from there. How big is it, and how scalable is that for you?
See, that business is having 3 parts. One is branded generics, that is having the 59th rank in the country, and we are into pediatric, gynec, and orthopedics as well. Then we do have an export division, which is also there in the 17% of the business. Therein we are present in 65 countries with more than 600 dossiers approved in those countries, and we do have 2 European GMP plants as well, which has been approved just a year back. We are yet to leverage those plants, and we have not yet started exports in the European countries.
Sir, you mentioned earlier in the interview that you've been growing at 15% every year. Do you have enough capacity within your company to grow that, or do you need to put in fresh capex going forward?
Yes, we do have enough capacity with us. We are the largest capacity holder in the country, and as far as we are consuming only 40%. Presently, our capacity is being utilized at around 40%, which can at any time can be scaled up to 60%. And then 2 more units are there, which are in Baddi, which we had bought just an year back, which has not yet started their production. Then we do have one injectable unit which has been established in Haridwar, which has not yet started its production. Then we are planning to have 2 more units in J&K, which is going to give us more capacities for the future growth as well.
Okay, so roughly around, if I'm not wrong, 5 new facilities are going to come up, and when are they going to come up? What is the time period for that?
No, we can say 2 units are going to come afresh. 2 units has already been bought from say some liquidator in Baddi, which are under operation, which are yet to be operationalized actually. And 1 unit which has already been established, license has been granted to us. We are yet to start the production that is meant for injectables. You can say yes, 5 units are yet to be leveraged.
And as and when that get leveraged, what is the kind of top line addition that can come in from them? Do you already have that order book to supply from those units?
say it is yeah, it is a futuristic statement that we don't want to give you, but of course, as far as injectable plant is concerned, it is going to start its production in the next month.
And what about the others?
This OSD facility will start its production very soon.
Okay.
J&K will take time, we are not in a hurry.
Mr. Sood, give us a sense of your working...
And you talk, say...
Please go ahead. Mr. Jain, you are trying to complete.
Sure. Please continue.
I'm saying, Mr. Sood,
you're talking about those 5 units. Yeah. Now you can continue with this, Mr. Sood. Yeah.
Mr. Sood, can you give me a sense of your working capital requirement, because that's also something which is for some of the funds are going to be used for that. Also, the 2 subsidiaries where you have the debt, you're trying to repay those debt as well. So once the entire debt payment comes into play, what is the kind of gross debt position that you will be sitting on, and you are operationally cash positive, but on a free cash flow basis, will you be positive in FY25?
So first let's address the cash flow question you asked. So for this year, we had a free cash flow from operations, and we had an overall free cash flow. Okay. Now, and we see that this would continue in the future also, and very strong cash flows. Now let's come to your question of how are we paying, what will be the situation of the debt. So once we get the proceeds from our IPO, the company would be debt free. As I said, there's very little debt, and we will probably maintain a war chest for our future expansion and growth from the internal cash flows that we generate. And coming back to your working capital question, so on our gross revenue, the working capital is lower than 1,000 crores. So we turn the working capital 4 times in a year. So largest business being the CDMO, and we are privileged to work with the largest pharma companies, and we get paid. So working capital for the company is not a concern, right?
What is the kind of working capital days, receivable days that you have?
Sub 90.
And do you plan to bring it down further?
Yeah. I think to exact number, it was 81 days this time. So I think this is where there is a constant scope to improve, but this is a good working capital days that we have.
Mr. Jain, my final question to you about your export business. You've been trying to export into 65 countries. So can you give us a sense of what is the kind of export strategy that you have?
Presently we were on all those 65 countries. Earlier we were not approved in Europe GMP, etc. Now 2 of the plants are already approved in Europe. Now our plan is to go for those regulated market as well. Then as far as those 65 countries, even we are having more than 600 dossiers already approved, and so many dossiers has yet to be leveraged. So we do have a plan to just expand it, say around 30% or 25% year on year.
Gentlemen, it was a pleasure talking to you today. Your IPO opens on July 30th. Price between 646 to 679. It's a total IPO size of 1856.7 crores, valuing your company at a little over 10,680 crores. Thank you very much for joining us on IPO Adda.
Thank you very much. Thank you for calling.
Thank you for having us. Thank you.